Welcome to Global Capital Engine, where we uncover the hidden mechanisms driving the world's wealth and reveal the truth behind money. For 15 years, a financial giant has silently cornered a precious metal, building a fortress of wealth right under our noses. While the world was distracted by stocks and crypto, they were accumulating physical silver, ounce by ounce, in absolute secrecy. This is not just an investment strategy. It is a calculated master plan to control a strategic asset essential for our future. The clock is ticking down to a moment that will redefine the global financial system and catch the unprepared completely off guard. We are witnessing the final moves of a chess game played by the most powerful banking institutions on the planet today. The balance of power is shifting, and the scarcity of physical silver is about to collide with an overwhelming industrial demand. Most investors remain asleep at the wheel, unaware that the foundation of the precious metals market is cracking beneath them. The number you need to remember is 750 million ounces, a quantity that defies all conventional market logic. This is the estimated hoard currently held by JP Morgan, a stockpile that gives them absolute dominance over the silver market. To put that number in perspective, it represents nearly one entire year of global mining production from every mine on Earth. Imagine a single entity controlling the annual output of a critical resource, effectively removing it from the open market forever. This accumulation did not happen overnight. It was a slow, methodical process that began over 15 years ago in the shadows. During this time, the price of silver remained surprisingly low, confusing analysts who saw demand rising year after year. We now know that this price stagnation was not natural, but the result of a sophisticated strategy of market manipulation. The strategy involved flooding the paper market with sell orders, creating an illusion of excess supply to drive prices down. They used paper contracts to suppress the price, while using the resulting low prices to buy up the real physical metal. It was a classic sleight of hand: suppress the public price with one hand and accumulate the physical asset with the other. This allowed them to acquire their massive stockpile at a fraction of its true value, effectively stealing wealth from producers. Despite numerous fines and regulatory investigations, the accumulation continued unabated, viewed by the bank as merely a cost of doing business. They played the long game, waiting patiently while retail investors grew frustrated and sold their holdings at rock-bottom prices. Year after year, the stockpile grew, transforming JP Morgan into the true central bank of the physical silver market. Today, they hold more physical silver than most sovereign governments, giving them leverage that extends far beyond simple financial profit. But the game has recently changed, and the strategy has shifted from accumulation to preparation for a massive price explosion. The turning point arrived in mid-2025, when market data began to show a peculiar anomaly in their trading behavior. For the first time in history, the massive short positions that had suppressed the price for decades began to evaporate rapidly. By October 2025, the bank had closed nearly all its bets against silver, signaling the end of the suppression era. They have flipped the switch, moving from a position that profits from low prices to one that demands high prices. This pivot suggests they believe the price can no longer be contained and are positioning themselves to ride the rocket upward. But internal strategy is only half the story. External forces are now conspiring to create a perfect storm for silver. Reports indicate that starting January 1st, 2026, China will implement strict restrictions on the export of physical silver. This policy shift is a game changer, effectively removing a massive source of supply from the global market instantly. China dominates the solar panel industry, which consumes a vast amount of silver, and they now need every ounce domestically. The explosion of the electric vehicle market has further strained supplies, as silver is a critical component in advanced electronics. Furthermore, the rapid expansion of artificial intelligence infrastructure requires high-performance connectors that rely heavily on silver's conductivity. We are facing a classic supply crunch, where soaring industrial demand meets a sudden and severe contraction in available supply. Inventories in London and New York are already at dangerously low levels, drained by years of deficit and strong demand. Tech giants are beginning to realize that without physical silver, their production lines for phones, cars, and chips will halt. This creates a perfect storm, where desperate industrial buyers must outbid investors for the limited physical metal that remains. The epicenter of this price discovery is shifting from the west to the east, specifically to the Shanghai Gold Exchange. We are already seeing a massive divergence, with silver trading at a significant premium in Shanghai compared to Western markets. At times, this premium has reached as high as 60%, a clear sign that the Western paper price is broken. This price gap acts like a magnet, sucking physical metal out of Western vaults and shipping it directly to Asian buyers. The COMEX is being drained of its physical inventory, leaving behind only paper promises that cannot be redeemed for metal. Investors holding paper silver are playing a dangerous game of musical chairs, and the music is about to stop abruptly. Meanwhile, JP Morgan sits comfortably on their mountain of 750 million ounces, watching the chaos unfold. Their pivot to a long position ensures that as the crisis deepens, their potential profits will become astronomically high. The collapse of the paper market is the first domino, triggering a rush to safety that will overwhelm bullion dealers. When the general public realizes that paper money is losing value, the stampede for physical assets will be unprecedented. History has shown us repeatedly that when faith in currency fails, people instinctively turn to the safety of gold and silver. With inflation proving to be sticky and persistent, the real purchasing power of fiat currency continues to erode every day. Silver is currently undervalued relative to almost every other asset, making it the most asymmetric trade in financial history. The gold-to-silver ratio is at historic highs, suggesting that silver must rise significantly just to return to its average. Low prices have starved the mining industry of capital, meaning no new supply can come online quickly to meet demand. It takes 10 years to bring a new mine into production, so the supply shortage we face today is locked in. New solar technologies require even more silver per panel, accelerating the depletion of above-ground stocks at a record pace. The global transition to green energy is non-negotiable for governments, and silver is the conductive glue holding it all together. London vaults report that much of their silver is already owned by ETFs, meaning it is not available for industry. This sets the stage for a short squeeze that could rival or exceed the famous squeezes of the past. In 1980, the Hunt brothers drove silver to $50, but they did not have the industrial demand we see today. Adjusted for inflation, the all-time high for silver is well over $100, leaving massive room for growth. JP Morgan knows this history better than anyone, which is why they have positioned themselves to be the ultimate winners. But they are not the only ones who can benefit. Individuals who hold physical silver are sitting on the same side. You do not need to be a global bank to protect your wealth. You just need to recognize the opportunity before others. The window of opportunity is closing as we approach the critical date of January 1st, 2026. Once the export bans take full effect, the flow of silver to the West could dry up almost overnight. We could see a scenario where the paper price becomes irrelevant because no physical metal can be bought at that price. True price discovery will happen in the physical market, likely at premiums far above what the official charts display. Dubai is also emerging as a major player, sucking in silver supply and paying premiums that Western exchanges cannot match. The flow of real wealth is moving from west to east, leaving empty vaults and paper promises in its wake. Trust in the banking system is eroding, and the realization that your deposit is someone else's liability is spreading. Physical silver has no counterparty risk. It is the only financial asset that is not simultaneously someone else's debt. As the world builds out 5G networks and smart grids, the indispensability of silver becomes more apparent every single day. There is no substitute for silver in many of these applications. It is the most conductive metal known to physics. Thrifting, or using less silver, has reached its physical limits. Further reduction would compromise the performance of the technology. The rise of AI brings a new, unforeseen layer of demand that was not calculated in supply models 5 years ago. Data centers require massive amounts of power and efficient transmission, areas where silver's properties are absolutely critical. JP Morgan has likely secured streaming deals with miners, ensuring they get the first right of refusal on production. When the shortage hits the retail market, premiums will skyrocket, and obtaining physical metal may become impossible for most. Silver acts as a shield against monetary debasement, preserving purchasing power when paper currencies are being inflated away. In an era of digital surveillance and central bank digital currencies, silver offers privacy and financial sovereignty. It allows for peer-to-peer value transfer without intermediaries, permission, or the risk of your account being frozen. The exploding national debt makes a pivot by the Federal Reserve inevitable, which will fuel the next leg up. They will be forced to print money to pay interest on the debt, driving investors toward hard assets like silver. Rising energy costs also put a floor under silver prices, as mining and refining become more expensive to perform. Geopolitical instability and labor strikes in major producing countries like Mexico and Peru threaten to disrupt supply further. The BRICS nations are moving away from the dollar, potentially backing their new trade settlements with real commodities. Silver is no longer just money. It is a strategic metal vital for national security and technological dominance. JP Morgan has used psychology against the market, inducing boredom and despair to shake out the weak hands. Only those with conviction and a long-term view have held on to their positions through the years of stagnation. Now, their patience is about to be rewarded as the market dynamics shift violently in their favor. Technically, silver is forming one of the largest bullish patterns in history, spanning over 40 years of price action. Once it breaks decisively above $50, there is no overhead resistance, and price discovery enters uncharted territory. The entire silver market is tiny compared to tech stocks. A small inflow of capital can send prices doubling. If just 1% of global managed assets rotates into silver, the price would have to multiply many times over. Institutional investors are waking up to the need for hard assets to hedge against the volatility of bonds. Recycling cannot fill the gap because the silver is used in such small quantities in electronics that recovery is difficult. Unlike gold, which is hoarded, silver is consumed by industry and often ends up in landfills, lost forever. The United States sold off its strategic silver stockpile decades ago, leaving the nation vulnerable to supply shocks. The West is now dangerously dependent on imports to fuel its green energy and technology ambitions. JP Morgan may position themselves as the savior, releasing supply to the market but at exorbitant prices. They will sell into the panic, transferring wealth from the desperate industrial buyers to their own balance sheet. The lesson here is not to fight the big money, but to understand their moves and position yourself alongside them. You now have the information that took insiders 15 years to execute. The question is, what will you do? Waiting until the headlines appear on mainstream news will be too late. The biggest moves happen before the news. Whether it is sovereign coins or generic bars, owning the physical metal is the only way to truly participate. Be wary of paper ETFs that may settle in cash rather than metal when the real squeeze begins. If you do not hold it, you do not own it. Counterparty risk is the single biggest danger in this environment. We are heading toward a reset of the monetary system, where tangible assets will regain their historical importance. Silver will likely be revalued to reflect its scarcity and its essential role in building the world of tomorrow. As fiat currencies wobble, the bedrock of gold and silver will remain standing, just as they have for millennia. This represents a generational wealth transfer, moving purchasing power from those who hold paper to those who hold metal. Protecting your family's future means looking beyond the illusion of stability and preparing for the inevitable change. Remember the 750 million ounces. The smart money has already voted with their capital. The mainstream media is silent on this accumulation, which is exactly how the banking elite prefers to operate. Do not take our word for it. Look at the data, check the vault reports, and see the divergence yourself. A global community is waking up, sharing information, and draining the physical market 1 ounce at a time. When millions of individuals decide to protect their wealth simultaneously, even the largest banks cannot suppress the price. Price targets of triple digits are not fantasies. They are mathematical probabilities based on inflation and supply deficits. Once the psychological barrier is broken, the fear of missing out will drive a mania unlike anything we have seen. Those who wait for confirmation will be the ones buying at the top, providing exit liquidity for the early adopters. Having an exit strategy is just as important as the entry. Know what you will trade your silver for eventually. The goal is not just to have more fiat currency, but to convert undervalued silver into other tangible, productive assets. We are in the early stages of a commodity supercycle, a period that historically lasts for over a decade. As the dollar's dominance wanes, the world will return to the neutral reserve assets that have no political allegiance. Silver has always been the money of the people, used for daily transactions while gold was reserved for kings. We may even see the emergence of digital currencies backed by silver, combining modern speed with ancient stability. JP Morgan has prepared for this eventuality, ensuring they remain at the center of global finance regardless of the currency. The banks are prepared, the governments are hoarding, and the industry is desperate. The question remains, are you prepared? To recap, massive accumulation, a pivot to long positions, Chinese export bans, and exploding industrial demand are converging. This is the key to understanding the next decade of financial markets and unlocking potential generational wealth. The train is leaving the station, and the opportunity to acquire silver at these suppressed prices will soon vanish. Education is useless without action. Take the time to assess your portfolio and consider your exposure to real assets. The momentum is building, and once this avalanche starts, nothing will be able to stop it from reshaping the landscape. We are living through a historical shift in the global order, and silver is at the very heart of it. Secure your position, stay informed, and trust in the fundamental laws of supply and demand that never lie. If you found value in this analysis, make sure to subscribe and join our community of awakened investors. Share this video with friends and family who need to know what is happening to their money and their future. Let us know in the comments. Do you think silver will break its all-time high in 2026? We will continue to track these developments closely and bring you the updates that the mainstream media ignores. Thank you for watching and for being part of the few who seek the truth in a world of illusion. This has been a special report from Global Capital Engine, your trusted source for financial intelligence and market analysis. Remember that all investing involves risk, and you should always consult with a professional advisor before making financial decisions. Stay safe, stay prepared, and keep your eyes on the real assets. We will see you in the next video. Global Capital Engine signing off. Watch our suggested videos for more insights into the changing global economy. Goodbye.